This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojcicki from Trend Spider. We have
breaking news. What is up, everybody? Welcome back to another episode of Benzinga Live. I'm your host, producer AB, joining you from downtown Detroit, Michigan. And we've got a lot to talk about today. Of course, Tesla reporting earnings after the close yesterday. The stock is trading down more than 8% right now. Not a great day for Mr. Elon Musk. Of course, the SpaceX rocket also blew up this morning. So between however many billions of dollars is lost technically to, in his net worth from Tesla stock being down 8%, as well as the rocket blowing up. Probably not the best day going for him so far, but he'll be fine. He's got a lot of money. Mick Silv is saying no more rainbows and sunshine on Tesla's catastrophic numbers. Yeah, I mean, what to me, my thought process going into, and I looked at like Tesla puts beforehand, and they were just so expensive that I couldn't pull the trigger and buy any. Honestly, I was looking today, and a lot of them, they were up, obviously, with the stock being down so much, but they were up, not a crazy amount with how much the stock is down. The puts I would have bought were up like 60 or 70%, not like 300-400%, what you sometimes see after earnings. But if you recall, a couple weeks ago, Tesla reported delivery numbers that were actually pretty good, and the stock traded down, and that was kind of my sign that, like, hey, look, even if the numbers are okay, even if they slightly beat expectations, the stock could get a hit, because I'm pretty sure the delivery numbers that came out a couple weeks ago were, record numbers, and despite that, the stock traded down. So I was looking at it more from the market sentiment standpoint, saying, hey, maybe, Tesla's not, the market's not loving Tesla right now, and it does look like it's kind of breaking again to the downside. I know our first guest, the stop hunter, Mr. Stephen Hode, hanging out backstage, has a Tesla chart we're going to look at. So I think without further ado, let's go ahead and give Mr. Hode our very special Zinger Nation welcome and bring him on the show. Hey, Stephen, how's it going?
Hi, I'm very good, thank you. Yeah, not so bad.
Good, glad to hear it. So I see we've got the Tesla chart here. You've got an arrow on the right side drawn to the downside. So I take it you're not very bullish looking at this chart.
Not at the moment, no. This is a very long-term look. It's a weekly chart, so you go back quite a few years, you can see that great run-up. But we've got this really strong downtrend. There's a sort of weak head and shoulders that has played out. You can see it pulling back down there, sort of hit the target around $100, $110. And it bounced back up. We've got this double top in at the moment. And as you can see by Fibonacci's just breaking down on through. And looks like it's heading back down to where it was back in early start of the year, around that $110 mark. So yeah, it's not looking that great. Like you say, after the earnings last night, and yeah, it's not the best shape there at the moment.
Yeah, so what would you want to see on this before, if you were looking for an entry point to get bullish, around where would you think about hopping in?
Yeah, that's a good question. Let's get drawing. Well, we got this sort of, it's really about where it is at the moment. So it's $167 there at that Fibonacci line. If it's can hold here and create a sort of a more sort of a sideways range, be looking for that reversal. You could be more risk takey and jump in as it starts to push on back up, but then you might hit the overhead $200 $210. The real bullish point to me is just above that here. That's when you get more serious bullish Tesla again. So in between there, 50-50 really. I think between the two, you've got to be smart. Like you're talking about options strategies in there to take out some income, or sort of shorter term point of view trades there. So 210 and above, I think, for me to get more excited about Tesla.
Yeah, so definitely a ways to go there.
Yeah.
And like you said, we could be moving more to the downside in the short term just based off the chart. Although it does look like here in the last couple minutes, at least, we're getting some sort of a little bounce on Tesla looking at at a shorter time frame on my end. Well, all right, let's see if we've got any questions in the chat. I see some people saying, 140, then 120 as their price targets for Tesla. What would you say just about like overall sentiment? Like, do you notice anything in the UK? People maybe not buying as many Teslas?
Yeah, well, we've seen obviously he's been doing his price decrease stuff because EV cars over here are very expensive, ridiculously expensive compared to the ordinary petrol equivalent. And I think, like we talked previously, there's a lot more competition. And we said like the BMWs, the Ford have actually gone very big over here. Just launched their new, I think it's Ford Explorer, EV car over here, and there's quite a lot of alternatives, and the quality of the Tesla car isn't perceived as that high. So when you're competing against a BMW or Audi or one of those other brands, and it's a similar price, then I think they're going to go there first. There's plenty of Teslas on the street. But the other problem is the charging of them. Because we're such a small country with loads of people crammed in, all moving to EV stocks, trying to get your car charged, it's taking so long, it sort of puts a downer on the EV sector as a whole until that sort of improved in the charging point sector. Then the EV, revolution's a bit slow at the moment, I think, over here, but, it's been embraced. But like I said, the competition at the moment for Tesla over here is quite significant.
Yeah, and I think, you're seeing a lot of that over here too, just more and more, like you said, we talked about this, just competition coming in, and a lot of uncertainty too, just not in regards to Tesla in its specifically, but just the overall macro environment. I think a lot of people are a little bit less willing to buy right here until they see, like you said, and once we see some sort of bullish activity return to the stock, then maybe that will get some other folks excited. So, all right, Stephen, let's move on from Tesla real quick. What else do we have on the docket here?
Okay, we've got oil, crude oil. We had OPEC Plus cutting back production a while back, which spurted up the price. We've still got this range is the big takeaway, $71 to $83. We saw the run up in the price, and more recently it's been the fears of the US economy, the demand out there more globally, and it's just starting to pull back. Although if you looked at the underlying, this is commitment of traders data, large speculators still holding bullish. I would like to see the inverse in the users of oil there, so that's still bullish. Seasonality does pick up, or buying season through May, June, and the volatility, the OVX, similar to the VIX type thing, more neutral. So I think it's a range bound market. Although there's a lot of talk out there at the moment of it, weakening off. It's that $83, $71. So that's my tick on the crude oil. And I suppose the other thing is, I know you like to watch I was looking at the if it loads up, the CME FedWatch interest rate thing. We're looking a quarter points up there, 86% chance of it happening. So that again dampens the that sort of oil uptake to the bulls.
Which I think a lot of people may be a little surprised by. I think at the time, a lot of people thought that we would be done or going data dependent and kind of done with some rate hikes. So I wonder how the market will really, interpret a 25 basis point hike. And I mean, go ahead.
We were anticipating it to come down over here as well, but inflation data wasn't so good, not as good as the US data, and it's looking like more increases to come, 0.25% maybe for the UK next. So we were also anticipating it was the end of it, and it was going to start coming down, but they're still eking out the odd quarter here and there.
Yeah. And then so we were looking at crude oil, XLE, energy as a whole, kind of selling off a little bit today.
Yep.
Any sectors in particular? I know in the past we were talking about the Qs. Any sectors that are showing strength to you that you've been watching?
Well, I've been doing okay in tech sector stuff, really. That's the one that still stands out and still holds. And I looked internationally as well, even over in China. It's the tech sector that is propping up the global markets by the look of it at the moment. And there's obviously subsectors inside it. AI is still very popular at the moment, but very volatile. Even like the energy sector, like I say, has come on off, but it's holding reasonably strong. Health sector had been coming off, and healthcare and maybe turning around again. Another one I've got an eye on, aerospace and defence.
Okay,
seems to be looking okay. I've been buying into. There's a company over here called BAE. I think he did it over in the US. It's been quite strong, so there's some good stocks there to drill into. So there's some of the sectors, but like I say, tech is the big one, really.
So, all right, now I know you've got some stocks over here pulled up that aren't very popular among analysts. Is that correct?
Yes, that's correct. So let me just bring them up. So in front of you, you've got the 6 most unloved stocks in the US there at the moment. Now, the filter on that was there had to be greater than 20 analyst predictions on what their call is on those stocks, and this was the 6 worst. As you say, Coinbase, cryptocurrency, Snapchat, social media, Carvana, I believe they're the online auto trading company, Intel, which was a bit of a surprise. Paramount, I believe that's Nickelodeon and all those type of things, and CH Robinson, a logistics company. So I don't know whether there's any value in those, the sectors, some of them in, like Coinbase, crypto is an interesting one. But the charts, you look at them, they don't look very promising either. But they're the most unloved at the moment there.
I think out of these, what could be interesting is Paramount. I mean, I think not. I don't know. I don't know if it was Warren Buffett. Some big value investor came in and bought some of Paramount, just from like a value standpoint. Thought it was a good deal. So that was one that could be interesting. I know in the U.S. they own the rights to rebroadcast the Champions League, which is a big deal for a lot of people. So Paramount has some things, I think going for it that could make it interesting on the long term. But definitely, like you said, the stock, just the chart itself, just looks ugly. Yeah.
There's from a technical point of view, you're not jumping on any of those, are you? Really? So I don't have a particular favourite I would pick. I probably agree with you. Paramount, maybe Intel. I don't know what's going on with Intel fundamentally. But,
you're right. That's a surprising one to see on here. I think I would assume that the analysts at least had a mixed take on Intel, not so negative. But Snapchat, Coinbase, Carvana, those ones up top, I wouldn't touch any of them.
No, they sort of fall into the meme stocks of, you might get a run on them because the Wall Street bettors or whatever get in there, but nasty, I think. So.
All right. Well, what about? I know you also have some racing stocks, some sports stocks to look at.
Oh yeah. But Formula One, the season's kicked off, and I know it's been growing in the US. They've had the Amazon series, Drive to Survive, I think it is, something like that. I don't watch it, but I know it's been growing, and you got 3 more races. I think you got Miami, Las Vegas, and Austin this year on the calendar. So it's growing, and could I find some stocks that are interested in to fit into their Ferrari? Now, that one's definitely tradable in the US. This is the US ADR of it. And as you can see, pushing highs. And hopefully going to break on through that 275 sort of area. Next stop, 325. So that's a good, I think, a good longer term bet. And also, as a car producer, they've done very well with their new SUV model, and got sold out for years in advance. So I think that's a good stock anyway to be in. Whereas if you flip to the right hand side, Aston Martin. Now this is on the UK Stock Exchange, and as you can see, off 98%, but they've been taken over by a guy called Stroll, who's a Canadian billionaire who's really stuck a load of money and done a lot of work with them, and they're sort of teamed up with Mercedes as well for a lot of the parts and production and ventures. And funny enough, his son actually drives for the Aston Martin racing team. But they've started off the season really well. They put a lot of investment into the Formula One team, and it's sort of paying off this season so far. Took in the picture a bit closer, you can see actually this year it hasn't been, that bad a start really. You can see it's from even from last November, it's been on up. So they're one I'm watching, Aston Martin, and they're due to rejiggle their range as well. New cars coming out, so yeah, I think they're I call them a low delta options play. They're a buy it and sit and look for that upside, but there's potential there.
Yeah, I think and then you can also I think the ticker in the US is FWONK. It's just like, I think, exposure to the actual F1, the Liberty Media company,
okay. Yep.
or whatever, FWONK. Yep. So that's one that I know people trade too, but like you said, Stephen, I mean, it's just been growing a lot here in the United States. I had never even knew anyone that watched F1 or racing or anything, and now over the past year or so, it seems like everyone is talking about it. Like you said, now 3 races here in the United States. So definitely one area that I think that people are watching, and could be interesting to see if it keeps growing, which it looks like it is.
Yeah. No, it's been growing. US, Middle East, I suppose Europe. It's always been popular, but yeah, those are 2 areas that.
Do you have a favorite driver or team?
Do I? Probably Ferrari.
Okay.
I shouldn't say it. They're Italian, but probably Ferrari. But no, I've followed it for a while. We're lucky. We've got racetracks quite close to us, so we go to the Grand Prix in the year. But,
nice, beautiful. Yeah. What did we not get to yet, Stephen? I know there's something else.
Oh well, I've got an interesting strategy play for you on the S&P 500. Okay, now, it's an inverse relationship to the VIX volatility. As you know, the VIX is the volatility of the S&P. It's the options contract. One of the key inputs into options pricing is the volatility, and the guys that come out with this number, it's their job to get it right. So it's a useful benchmark to use. But if you notice what I've drawn on the chart, you can see as the S&P price moves up, the volatility moves down, and vice versa. Again, as the volatility moved up, the price moved down. And again, more recently, we've got this up in the S&P 500, down in the volatility. And so that's what I look for. It's a real simple strategy. Volatility down, price up, and vice versa. So just in terms of where we're at the moment, I wouldn't be selling the S&P 500 just yet, because the volatility is still at a low point. So just something to throw in there as an idea of how to use the VIX. If trading it is very adventurous and very seat of your pants type stuff. So if you want to use the VIX, then maybe use it this way in conjunction with the S&P.
Yeah, I like that. I mean, I think, like you said, just understanding how the VIX will impact, option prices as well. So you can get the kind of double whammy there, that if you wait till the VIX starts popping up and then you go, short the SPY, or you buy some SPY puts or whatever, then those option contracts can increase as the VIX rises as well, which is always good.
Yeah. The nice thing with that chart is, though, that's a daily chart. You can break it down into intraday levels as well. I look at it on an hourly charts, 3-hour charts. So you can get those same inverse correlations in lower time frames, which gives you more price action. So something your viewers, could maybe look into and investigate.
There you go. Well, Steven, it's always great to have you on the show. I'm looking forward to in the next couple of weeks here getting you set up with your own type of show in the morning here. And thanks again. It's always good to get your insights. All right. Well, enjoy the rest of your week. We'll chat soon.
Okay.
All right. Bye-bye now.
Will do. Brilliant. Thank you, Aaron. See you later.
All righty, y'all. That was Mr. Steven Hode. Going to go ahead and drop his YouTube channel, The Stop Hunter, in the chat for you guys to go check out more from Mr. Hode. And like I said, he'll be doing his own show here on Benzinga in the morning soon. So excited about that. We've got our next guest hanging out backstage, Mr. Steve Kalajian, joining us. He said he's going to be in Florida soon, which is where we just came back from. If you guys, we were in Miami for the Benzinga Cannabis Capital Conference. Speaking of cannabis, it is 420. We should have taken a look at some cannabis stocks today. We can still do that. But let's go ahead and get Mr. Kalajian on the show, bring him our very special Zinger Nation Zinger Nation welcome. And when we come back, we'll be talking to Steve about what charts he's been watching. Mr. Steve, how you doing?
Hey, Aaron. Great seeing you.
Yeah, good seeing you. It's been a couple weeks. So how's you? So you said you're preparing to move to Florida?
Yeah, next Thursday I'm out of here, heading down to Jupiter Beach. So setting up my whole office. All this is going to be transferred down there, and I'm looking forward to it. So come on down, brother.
Wow, Jupiter. Yeah, I actually will come down because that's where the St. Louis Cardinals play their spring training. So I'd love to come down there.
You got the Roger Dean Stadium right next door to me. So yeah, come on down.
Yeah, exactly.
I got extra room.
Well, would love to. All right. Well, what's been your market outlook? Still pretty bearish?
Yeah, I mean, right. I don't think well, let me put it this way. So I got buys on the daily and the weekly, but I think this is going to be short-lived. And I think what we're going to have is some type of I'm looking for a blow off to like the 42.30, 42.50 range. Again, lower highs. And I think the middle of the second, third, and early part of the fourth quarter, I think it's going to be very troubling here for the market. You can see Netflix and Tesla's earnings coming out. The PE ratios are very high. I think we're going to go into a hard recession. I think they're going to raise rates again here, even though the numbers came in. I mean, look, 9% CPI is a staggering number. They go from 2 to 9, then they maintain they're going to try to get to the 2% level. Then there was thoughts Kashari nixed that because there's no way they're going to go from a 2 to 3%. Kashari said that'd be devastating to the Fed. So even if you're at 5.8 or 6 to 4 to 2, that's still 4. Most people are living week to week here, and it's really not playing well. I think the Federal Reserve really has done significant damage here to the consumers and to the people of the United States. But overall, this is a significantly negative pattern here. I think we're just going to consolidate, get one more blow up, but we have a ton of overhead resistance. I believe that we're going to head significantly lower here in the months ahead.
Yeah, I mean, I think right now you have a lot of people that want to. They might have missed out on this rally, so they're waiting for the next kind of pull down. Let me go to a daily chart here on the S&P 500 so we can see. From about, we were down at 350, rallied all the way up to about 415 or so. I don't know. I mean, from a chart perspective, it wouldn't be surprising to see us kind of run out of steam. So you think just come back and retest these lows down to 350?
Oh, I absolutely think that I think that we're going to significantly go lower from here. This 40, I think that I would not be a buyer of stocks up here at all. I think there are lower levels to come, and I mean there are still good names. I agree with your previous guest. I think Tesla's going right back down to the lows that we saw, the 125. What was it? 125 low or something like that. And I still think it's going it's going to hold the 100 handle mark. However, but names like Coinbase have gotten slaughtered here, even with the rise up in Bitcoin. I think there are some quality names. I mean, NVIDIA ran nicely over 100 points off the low. These are names that I would probably look at if they get near those levels. If we even get, Amazon's, the 85 level, 80 and 90 level. These are names that you could probably buy and hold if you ever get to that level. But again, we're far away from that. And I think the market is just, for me, I think gold's telling a tale here as well. Gold above the 2,000 mark. I think gold's going to go a lot higher in the months ahead. Could even be over that 2,100 level here as well. You got a monster bullish trend here on gold. Monster bullish trend. You'll get any pullbacks will make higher lows along the way, and gold ultimately can get to 2,500 here. So I'm really bullish on gold, and bearish on natural gas, bearish on oil right now at these levels. But when oil was at 65, I was jumping up and down and telling people, look at USOs on the lows, and USOs ran from, they ran about $9 off the lows there. So I think the lows are in on the USOs for the year. I think you got a lot of backing and filling on that and making higher lows there. So gold and oil, I'm bullish on if they get, if you making higher lows. S&Ps, I think if they push up, I'd be more of a short seller or selling longs and looking for a significant pullback in the months ahead.
Yeah, and like you said, Stephen, there's still some good trading opportunities out there, whether you're looking at stocks like NVIDIA that have been on a great run or oil on some of these trends. But certainly, I mean, just going over to oil today, trading lower. Gold is having a decent day. One of the only things I've seen that's relatively green today. Your financials are getting kind of crushed today. Your regional banks still. So it does seem like there's still a lot of uncertainty out there.
Yeah, I do. And, again, we can't factor in, again, I'm not just saying, God forbid, there's any geopolitical events that can happen here. God forbid if China goes into Taiwan, the S&Ps will be cut in half overnight. You know what I'm saying? So, again, I don't want to think like that, but I think it's very risky here. We're not nowhere near a bull market. The monthly charts are really screaming shorts here. The bigger time frames, that is, the intermediate and short term time frames are buys. So I'm gonna let this exhaust itself. Look for better entries to get short, higher up, and then looking for. Right now, you see the market staying in a range like a 50 handle range. It's because you got big buy divergences here on the 30 and hourly charts every single day. So, but with that, I think we're going to get that capitulation to the upside, and then I think they're just going to drop eventually, coming into early May.
Got it. So how have you been trading the market, or have you been, mostly cash? What's been your strategy?
We've been trading a lot of natural gas, boil. When nat gas dipped below 2, we bought a lot of boil down there and traded up. I mean, a couple of days, we were up 8 to 10% on every position, and we kicked them out on just the swing type trades. Intraday stuff, it's just so many freaking opportunities. It's just amazing here. I mean, like I'm looking at Boeing short, just dropped $2 in the last 30 minutes here. You got great trade, like today you had big sell divergences in NVIDIA above 280, Amazon above 105. You had a big buy divergence in Netflix on the lows here below the 319 and it rips almost $6. There's trading opportunities every single day. And what we try to do is just compound our returns, and that's what we do.
Yeah, and I think right now, a lot of people, it's been kind of a tough market to trade in, and obviously a tough market to just have your money parked in as well. So I've talked to a lot of people who have gone mostly cash and are kind of just waiting to see if they, can just park their money in the market and go long. What would be your sign that, okay, now it's safe to start doing that, at least maybe not with your whole portfolio, but some of it? Would you want to wait till the Fed actually starts cutting rates?
I think that there's 1 to 2 more hikes, then a pause, and then I think that I mean you can get like a 5-year CD now, Aaron, at 5%. I locked in on some of my kids' money at 5% on a 5-year CD. Yes, it could be if they start slashing rates, you know, and Fed funds go from where they are down, cut in half, down to 2.5%, 3%. Those bonds, those CDs could be callable. Okay, but in the end, I mean, Tesla's making new lows here. This Tesla's absolutely finished. This thing is going right back down. Remember, we had the buys on the lows, and it rallied about 90 to 100 points off that when we were talking many months ago. Yeah, right around here we were calling for the lows, and you had this monstrous rally. I think the lows were at the 125 level, if I remember correctly. But I mean, I think that people now are seeing the higher rates, and that I would say that you can even get like a 6 or a 9 month bill at 4.9%. I'd rather be locked in on a treasury or a short term CD, and then wait for a capitulation to the downside, and then you can start nibbling on ETF. I'm a big ETF believer. I don't like individual names because you got to worry 4 times a year for earnings. But I mean, you can buy the SPXLs, you could buy the TNAs, you can buy the TQQQs. These are all priced, and if you get down to levels, I think be really, really very attractive to the retail buyers.
Yeah, and I think for, like you mentioned, kind of for the first time here in a while, I mean, for as long as I can remember, that T-bills and treasuries are getting more interesting for retail investors than a lot of opportunities in the stock market. And so, and a lot of, and the market itself hasn't really, been that punished by it yet. I mean, the market's obviously downturned a lot as interest rates started to pick up a year and a half ago or so, whenever it was. But overall, I mean, the S&P 500 is now back up, 10, 13% off its lows, and yet those treasury offerings aren't going anywhere. So I'd be surprised, or I guess I should say I wouldn't be surprised if the market does see some more pain as those other options get even more attractive until, of course, then the Fed is eventually forced to flip it.
I think the first sign of a bull market is when the Fed decides to say the word pause. And then, or to make the first, probably 90% when they make the first cut, and we're months away from that, months away. It could be 4 to 6 months away before that, 8 months away. They really have egg on their face because they really didn't apply this aggressive tone until the CPI got to 9%. So they really have a lot of egg on their face. And people say to me all the time, "Why should we listen to these people? They're always wrong for the last 20 years plus." Since Bernanke, they've been wrong, and I agree. I mean, but listen, it is what it is. What are we gonna do? Get rid of them? They're there. I think it's completely wrong from a trader's point of view that these Fed officials speak during the day. They should have especially the non-voting members. You speak once. You speak that once Wednesday every month. You make your decision, rates up, unchanged, or cut. But these people are constantly talking. And they're causing significant moves in the market, up and or down. I mean, they should just be banned from talking. Really, it just puts a significant stress factor in the trading. Look, I mean, you have freedom of speech. You're allowed to say what you want, but you want to talk before the market opens. Talk after the market closes. And what you're contributing. Sometimes when Bullard speaks or something like that, especially non-voting members. It just, you can see a 20-handle drop on the S&P in 3 minutes,
Yeah. All right. Well, Steven, do you have any like individual names you want to talk about?
Yeah,
Anything
I'm
else?
looking. Yeah, I think I think when you get this capitulation to the upside, I'd be looking at the SQQQs. I'd be looking at the SDAOs. I'd be looking at the TZAs. I'd be looking for the SPXUs. These are names I think you can get a pretty decent return or a nice trade, especially if the S&Ps go to my number, say 4230, and then they drop 300, 400 points from there. You're talking pretty big percentage moves on these names for the upside because they're the inverse.
Yeah. Here, let me pull up the SQQ real quick. I got to get back to my right screen here. SQQ. Having a good day today, but yeah, I mean, this thing's been beaten up too as the tech's actually been pretty strong. I mean, you mentioned Nvidia has been one of those leaders. Have you traded Nvidia at all?
Oh yeah, we caught shorts today above the 280 level. We caught a short above the 278, just dropped $3. Just another pattern here above the 277 level. So we're in a negative trend here in Nvidia. I mean, but look at where this thing ran from, right? The 120 level, right?
Yeah,
so
it's been on an absolute tear.
Yeah, I mean, this thing is going to, in my opinion, one of the best names on the board in regard to the fact that if we get a capitulation to the downside eventually, this is a name I think will make a significantly higher low than that low that we saw when you pointed.
Yeah, I mean, that's one that when the Fed does start pausing, look out, because this thing's been on this incredible run.
Well, I mean, but I'm looking for this thing to pull in like, $80, $90, maybe $100, make a higher low, but I think this is a great, if you ask me, there's one name on the board, this will be one of my names. Not here, but I don't think that 120 level is going to be seen. But if we get between like the 165, 185 range, I start accumulating it.
Yep. Well, Steve, Mr. Collision, Steve, thanks again for hopping on the show today. So I take it next week you'll be out as you're moving.
I'll be ready the week after because I got everybody coming here and breaking this office down and everything like that. But Aaron, great to see you. My door is always open. We'll go to a ball game together.
Beautiful. Yeah. Next like February. Let's do it. Let's lock it in.
Let's see. You got it, brother. Have a great day, Aaron. Take care.
You do the same.
Bye, everybody.
All right, guys, that was Mr. Steve Kalasian. He'll be joining us in a couple weeks. Next week, he'll be doing his move. But alrighty, folks, so let's do another check-in on Tesla real quick before we wrap up on the day. Check in on Tesla and the overall market. I mean, Tesla continuing to slide here. Taking a look at the 2-minute chart, you can see we got down to about 162, got a little bounce back up to 163. So we'll see if Tesla can hold these levels because it's been ugly pretty much all day for Tesla, down nearly 10% at this point. Wow. Going over to the S&P 500, hanging out pretty flat. Wow, look at this little 2-minute bar here. I mean, the S&P 500 that had a nice little sell-off, then it came absolutely roaring back the past 4 minutes back up to, I mean, still relatively flat. Looking at the daily chart, the S&P 500 had like 2 days in a row this week where it closed within like 0.1% of what it opened at. Just extremely flat days, pretty much the same with the Qs, but trading a little bit lower today. Checking out some cannabis stocks in honor of it being 420. The ETF MSOS is down 2.9%. Let's check out some of the big individual names. Tilray down. This doesn't seem fair. None of these cannabis names should deserve to be down on 420. That's not right. So I don't know. Hopefully they'll come back. MD says Steve was right on all the sell divergence Monday morning on Instagram Live. T smoked. You don't see a name like that down 10%. Wow, I didn't see this. So AT&T down on earnings. Uh-oh. I have AT&T. Hopefully they're not going to use this as an excuse to jack up my phone bill even higher than it already is. I'm just kidding. My mom still pays my phone bill, so I don't even care. That's like the last thing that my mom's still paying for. But here's the thing: is it would cost more for me to go out and get my own phone plan than to just stay on hers as like the, you know, 6th extra line. Like it just makes more economic sense for me to stay on there. That's at least what I tell myself. But alrighty, y'all. I've got a couple articles to wrap up, some other things to do, so we're gonna cut the show a little bit short today. I'll leave the chat open for another 60 seconds in case anyone's got something they're dying to check out today. MyPillow CEO Mike Lindell ordered to, okay, the headline just went away, weak earnings and weak economic data, what it all means for your money. How's Fox News' stock doing, by the way? Isn't that a... Is this the... Fox News, yeah. All right, later, Crow. Hope everyone has a great rest of Thursday. We'll be back with more content tomorrow and later today. Please do not go anywhere. Stay tuned to Benzinga's YouTube. Coming to you live all day long pretty soon.
This is Ben